Someone's buying it.
And that's usually the central bank. Like, because I mean, that's what's happening in the U.S. We have super low rates, obviously, but no one's buying it. Stan Druckenmiller just came on to CNBC recently and gave his prediction, as many bears have been saying, that the U.S. will lose its global reserve currency status because of all these inflation concerns, how we've been blowing out the spending across the board. But he mentioned a couple of very important stats. Last year, there was actually a massive, like, $1 trillion outflow from foreigners in dumping their U.S. treasuries, yet yields stayed really low. And that's because the Fed has been buying all these treasuries. So the Fed is the one who's actually buying all of the new debt. No, foreign investors, whereas maybe in the past were buying it, they're not buying it now, which means that the debt's being monetized, which means more money's flooding the market to buy this debt and to keep yields low. Because I think if we had a real market with treasuries and they were actually had to be bought by investors, not some central bank that can print money, yields would be dramatically higher because people are expecting more debt spending in the future. So you're not going to you're factoring in inflation into your real price. But I think the yields that we're seeing now across the board are not legitimate. Well, I mean, they're legitimate in as far as they're not fake, but it's because of what central banks are doing, not because of what like a true market is doing on its own. That's my hot take on it.